Hello. The company being analyzed today is Enviro Infra Engineers Limited. This is a 4,305 crores company which is engaged in the construction of water and wastewater treatment plants and also water supply projects for the governments. So, supply of water, treating water and making treatment plants, wastewater treatment plants. These are the businesses it is involved in. This is a very interesting business which has seen massive growth. Like to give a glimpse, look at the compounded sales growth. Last 5 years, 58% compounded sales growth. Compounded profit growth, last 5 years, 102%. So this is last 5 years data, and you can see massive growth, even 3 years, TTM, trailing 12 months, last 12 months. One can see massive growth. So this is a company which has experienced some massive growth, and management of the company has said it's still positioning itself for 30 to 35 to 40% CAGR growth in its revenue for the coming next few years. That is what management has personally said. Statements of management. So today we're going to analyze the company's financials, what it actually does, and some of its future prospects. So let's start. First of all, we can see current price, we can see book value, which is assets minus liabilities per share. Then return on equity, really nice, 27.4. Return on capital employed, 31%, very high, very high. Price to earnings ratio, 22.5. So ROCE and ROE, you can see, are really nice. Now we already saw the growth numbers for revenues and all. Let's take a look at them in these terms, number terms. So 2020, 2022, all the way from 2020, all the way to 2025. We got sales, we got operating profit. So in 2020, we had sales of 108 crores, operating profit of 10 crores. Okay, operating profit margin 9%. We move all the way. We get 1066 crores of sales in 2025, like 10x in 5 years. Then operating profit of 268 crores, you can see operating profit margin of 25%. It has grown over the years, so 25%, really nice. If you go all the way down, this black number 177, that's in net profit, 177 crores, really nice. Then we go down, return on equity has seen a decline in the coming few years, past few years, has seen a decline, but still very high, 27%. 5 years ago was 37%. Cash flow is not this company's strong suit. You can see cash flows here. We focus on the cash flows from operating activity. Now you see one thing in the cash flows from operating activity till 2023, massive, massive growth in cash flows. Since then, we did see a massive negative 102 crores of negative. 2025 minus 47 crores. So let's see, it was a cash flow positive company, then just hit a massive cash flow negative. 2025 was lesser, so let's see if it can recover. If this is a trend, like massive rise, massive fall, now it's slowly climbing back. So let's see how good the cash flows will be in the future. This is the company's snapshot. Okay, here we have 12 states, 245 engineers. Okay, 68% revenue CAGR. Okay, 53 projects it has delivered. Debt to equity 0.24, and look at this, 2,997 crores worth of an order book. These are the orders which the company has already got. And if I remember from memory, the company is projecting around 1,400 crores of revenue in fiscal year 2026. So almost 40% growth from this year. So let's see if it can actually achieve that. Very impressive it will be if it can do. But still, 2,997 crores of an order book for like 1,000 crores of revenue this year. So big order book. Of course, execution also matters. How long does it take to actually execute the order book? Then, what does it actually provide? Business offerings. We got sewage treatment plants. We got common effluent. Effluent, I believe, is kind of a waste, liquid waste. So treatment plants, water treatment plants, water supply schemes, and operation and maintenance of all these projects and treatment plants. So these are the things it actually provides. Moving on, moving on. Financials, yes. Here you can see the revenue from operations, the EBITDA. We've already seen these. So let's just take a look at the PAT margin. 16.2, 2023, fiscal year 2023, 16.3, fiscal 2025. Okay, double net profit margin company. That's always a good thing. Net worth has shot like massively up. You can see it doubled in fiscal year 2024 and more than doubled in net worth fiscal year 2025. Now, debt debt has also increased 234 crores, but net worth has just ballooned. So net worth has increased a lot. That's a good thing. Debt to equity fell from a high of zero point 0.8 in fiscal year 2024 to zero point 0.2 in fiscal year 2025. Now, return equity you can see has seen a severe decline along with return on capital employed. Now, we did see that the company's profits have grown massively. We saw that the company's revenue has grown massively. We saw that the company's operating profit margin has grown, leading to profits growing way faster than revenue. So this decline in return on capital employed and return on equity could mean that again you saw this massive jump in a net worth, which means the company's assets have grown way faster than revenue. It also recently had its IPO, so the IPO funds it got must have also increased its net worth, its assets. And of course, the company is expanding, so it's acquiring more assets. So maybe this declining return on equity and return on capital employed, not saying it's a good thing, not saying it's a good thing, but could be just because a good reason, or the reason could be that its assets have expanded so much. Enough yapping about this. Okay. Revenue bifurcation. So here, take a look at fiscal 25. That's a whole year. So WWTPS. So TPS is like treatment plants. Okay. So water and wastewater treatment plants is WWTPS. It contributed 47.6% of revenue in fiscal year 25 and 69.7% of revenue in fiscal year 20 in quarter one of fiscal year 26. We go back, this contributed 27.8% revenue. We go back even farther, it contributed 69% revenue. Okay, very volatile percentage of revenues coming in different segments. Then water supply scheme projects. This is what it means. And we have operation and maintenance contributing to 3.8% revenue. So mostly it seems WWTPS and WSSPS, which is the water supply scheme projects, they kind of compete all of that. Okay. Majority of revenues, 81.4% comes from EPC kind of projects. Now, what does EPC mean? Basically, what we're talking about here is how it delivers a project. EPC means engineering, procurement, construction. So for designing a water treatment plant, let's say, it designs it like engineering, procures the material for it, it constructs it, and it gives it away. So HAM, EPC, O&M, basically they're making the same thing, but they're different ways of approaching it. HAM, hybrid annuity model, it's another way of like financing a project, who's gonna pay for it, how much they pay for it. The same product we're talking about here, but different ways of engaging with the client as to how they will pay for the product. So that's what it means, HAM and all that. But treatment plants, wastewater seems to be competing with water supply. And where does revenue come from? Here we see Rajasthan contributing 31% of sales, Madhya Pradesh contributing 24% of sales, UP contributing 20% of sales, Jharkhand 10%, Gujarat 9%. Okay, so Rajasthan focused along with Madhya Pradesh and all. Top three states contribute a lot. Finally, order book analysis. The O is missing. This is the total order book. So where's the order book coming from? It seems that wastewater treatment plants, WWTP, is having like 1,567 crores worth of order book. Now you see this massive number 15,000. This is in millions of rupees. So millions of rupees to be converted into crores, like a one decimal point difference. Okay, that's why it's converted into crores is 1,567 crore rupees. EPC, HAM, same thing. Okay, not same thing, but comes under WWTP. And water supply scheme projects for the government, not for the government, for anyone, sorry. Water supply scheme projects, 137 crores. And operation and maintenance, 945 crores. Okay. And you can see majority from EPC. So EPC, it seems that 76% of its revenue, the company's revenue, comes from just designing, constructing, and then giving the treatment plant to the client. That's what the majority comes, and the client pays for the entire construction basically. It pays for the project in a way, completely for the way in EPC. HAM is, I think it's a mixed financing. Portion of financing comes from the client, portion of financing comes from the constructor company. It works in that way, but again, it's a different thing. HAM, you can search it up. Google will explain way better. So this was this company. Okay, that was pretty short. Industry opportunity. Let's take a look at industry opportunity for a second. So overall, pretty interesting market it's operating in. This is the water treatment, sewage treatment, and effluent treatment market. What are the expected growth rates? It seems from fiscal year 2023 to 2033, 6%, 6%, 5%. Interesting, interesting. Then, yeah, I think that's it. Okay, more opportunities. These are some government schemes. You see, Amrut, JGM is, I think, Jal Jeevan Mission. Yes, Amrut is another government project. These are government schemes which are funding all of these water treatment plants for the government, water supply project schemes for the government, as we saw earlier. And you can see the budget. You can see in fiscal 2026 again, massive amounts of money are going to be coming through. Now it's comparable to like fiscal year 2024, comparable to fiscal year 23. So okay, government schemes are a big thing for the company too. I don't know if the majority of money comes, but I have a feeling that like a majority of money comes from like the government. So that was it. That was the company. Again, I think it's planning to grow around 35 to 40% CAGR in the next few years. So massive growth, not the best cash flows. In the P&L, I would like to everyone to pay attention to this. Pay attention to interest. Interest is the interest they pay on loans. So you can see interest 3 crores, operating profit 10 crores. When you divide interest, sorry, when you divide operating profit by interest, it gives the interest coverage ratio. Higher this is, the better, and shows how comfortable they are in paying off their debt, in paying off the interest on the debts also. So let's go all the way to 2025. Okay. We got 268 crores of operating profit and 37 crores of interest. We divide that and you get 7.2 interest coverage ratio, which is a very, very healthy interest coverage ratio. So it seems that paying off interest is not an issue for the company, at least by this calculation. So not the most heavy, like debt wise, the company seems like. Again, it's growing very fast. It's saying it will continue to grow very fast, which is interesting. What else can I show? I think I don't have much to actually show here. These are some of the company's marquee clients. You can pause actually and you can know if you recognize any of them. I recognize Hindustan Zinc, but other than them, I don't really recognize anyone else. I want to show one more thing I can see here. We can look at the consolidated balance sheet of the company. Okay, video has already crossed 14 minutes. Let's do this quickly. I didn't. Okay, these are in millions of rupees, so you can convert them into crores. Pay attention to current liabilities. Current liabilities for, yeah, as of March 2025, fiscal 25 for 398 crores. Current liabilities as the liabilities it has to pay within the next 12 months. Compare them to current assets. Assets which they can sell in the next 12 months into cash for cash. 12,235 million or 1,223 crores. So current assets are like more than 3 times, almost 4 times, or more than 3 times current liabilities. So current ratio, current assets being more than current liabilities It's like 3 times. The ratio is 3 times. We take a look at, oh, look at this. Oh my God, look at this. Cash and cash equivalents of 162 crores. I think majorly from the IPO. See, last year was 9 million, 1,624 million, 162 crores worth of. Okay. Here, take a look at trade receivables and look at bank balances. Oh my God, bank balances 392 crores. This could be margin money held with banks, meaning some money has to be held with banks as collateral security for loans. But we can take a look at later video. But again, okay, nice balances 392 crores, 162 crores of cash and cash equivalents, pretty good, and only 98 crores worth of long-term debt. Okay, 98 crores worth of long-term debt. Okay, nice. That's good. That's good. Shareholders funds, you can see other equity, 819 crores, shareholders funds, 994 crores, money owed to shareholders, basically by obligation. We are the shareholders, or somebody buys the shares, they are the shareholders. So the obligated shareholders are the owners of the company. Short-term borrowings, 135 crores. So pretty good balance sheet, I've got to say. Current asset divided by current liabilities, current ratio is more than 3, which is, I guess, a good thing. That's a good thing. Good cash and cash equivalents, 162 crores. Good growth prospects. That is what the company is saying. And that is it. 30% revenues from Rajasthan. Bye.